All right, welcome. Today, we are going to dive into a really powerful new trading indicator. It's all about giving you an edge by showing you where the real market momentum is building. In this right here, this quote just nails the problem, doesn't it? I mean, how many times has this happened to you? You see this monster move, you finally jump in, and poof, it feels like the party's already over. And that's because, most of the standard indicators out there are basically just history lessons. They're telling you what just happened, not what's about to happen. So here's the game plan for today. First, we'll break down the big problem with momentum. Then I'll introduce you to the trend reactor. We'll get into the nitty-gritty of dialing in your settings, I'll show you 3 different ways you can trade with it, and finally, we'll talk about how to master different markets using this thing. All right, let's kick things off with the core issue. I mean, why does it always feel like we're a step behind the big moves? Well, it really all boils down to one thing: indicator lag. Just think about it for a second. Your standard tools, they're reactive, right? They only confirm a trend after it's already going strong. But the real money, the real opportunity, that's in spotting what the big institutions, the smart money, are doing before that big move actually kicks off. And that little bit of lag, that's literally the difference between getting a fantastic entry and just chasing the price like everyone else. Okay, so that's the problem. And that, of course, brings us to the solution. This is where the Commodity Trend Reactor comes in. It was built from the ground up to tackle this exact issue of lag head on. Now, don't just think of this as another squiggly line at the bottom of your chart. It's so much more than that. Its entire purpose is to get you ahead of the curve. It's designed to sniff out those subtle clues that the big institutions leave behind, giving you a much clearer picture of when a real momentum shift is about to happen, not just confirming it after the fact. So you're probably wondering, how does it actually do that? Well, it's not magic. It really comes down to 2 key innovations. First, it takes the standard CCI indicator and supercharges it with some really intelligent trailing logic. This helps smooth out the signal so you're not getting faked out by every little price twitch. And second, and this is where it gets really cool, it actually plots a dynamic line right on your price chart. Think of this line as your noise-canceling headphones for the market. It only changes color, it only changes direction when the momentum has genuinely shifted. It cuts right through all that noise. Okay, but look, having a powerful tool is one thing. Knowing how to set it up correctly, that's a whole other ballgame. So let's dive into how to dial this thing in for maximum accuracy, so we can filter out all those annoying false signals. All right, get ready to take some notes, because these are the settings you're going to want to start with. First up, we're going to set the CCI length to 200. Now, this is super important. A high number like this makes the indicator ignore all the choppy, meaningless noise and forces it to focus only on real, sustained momentum. Next, the trail line length. We'll keep that at 20. That's kind of the sweet spot for balance. Then, you've got your thresholds at +50 and -50. Think of these as your green light. The CCI has to cross these levels to confirm a trend. And last but not least, make sure you enable mark extremes. This is going to be a huge help for a reversal strategy we're going to talk about in just a minute. So now that we've got the indicator all set up and ready to go, we can start building an actual system around it. And I'm going to walk you through 3 different strategies that are perfect for all kinds of market conditions. So first, we'll cover the basics, a simple trend-following strategy. Then we'll get a bit more advanced with exhausting reversals. And finally, we'll put it all together with a super high conviction method using multi-timeframe confluence. All right, strategy number 1. This is all about trend following, and it's just beautifully simple. You're basically just waiting for 2 things to align. So for a buy signal, you want to see 2 things. The trailing line on your chart needs to be green, and the CCI indicator down below needs to be above that +50 line. That's it. And for a short, you guessed it, you want an orange line on the chart and the CCI below -50. When you get that alignment, it's a huge sign that the trend and the momentum are on the same page, and that is a high probability entry. Okay, strategy 2 is where we start to play offense a little bit. We're going to hunt for reversals using something called divergence. So a classic bearish divergence happens when you see the price on your chart make a new high, right? But at the same time, you look down at a momentum indicator like the RSI, and it's making a lower high. That mismatch is a huge red flag. It's basically telling you that the fuel for this uptrend is running out. Now, when you see that divergence and our trend reactor tool marks an extreme dot up top, bingo. That is a very, very powerful signal that the trend is exhausted and a reversal could be right around the corner. And that brings us to strategy number 3. And honestly, this one's probably my favorite. It's all about confluence.
This is the method you use when you want to be as sure as possible that the big money players are on your side. So here's how it works. Let's say you get a beautiful buy signal on your main chart, maybe the 1 hour. But before you pull the trigger, you're going to zoom out. You check the 4-hour chart, and then you check the daily chart. And if the trend reactor is green and bullish on all 3 of those timeframes, oh man, that is an incredibly strong, high-conviction setup. That's the market telling you that the momentum is real, and it's happening across the board.
All right, but we all know that trading isn't a one-size-fits-all game, right? Every market, Forex, gold, crypto, they all have their own unique personality, their own rhythm. So let's talk about how we can tweak the settings of this indicator to get the best performance out of each one. Okay, this table right here, this is going to be your new best friend. It's your cheat sheet for different markets. And just look at the logic here. For something super volatile like crypto, we use a shorter CCI length of 120. Why? Because we need to be a little quicker to catch those fast moves. But then you look at major Forex pairs, and we use a much longer setting of 250. That helps us filter out all the noise and chop that comes from things like central bank announcements. And for gold, gold can have some absolutely massive violent moves, so we widen those thresholds out to plus or minus 75. That way we're only getting a signal when a really significant shift happens. Tweaking these settings is absolutely key. So, what's the big takeaway from all of this? It's this. The Trend Reactor is a fantastic tool, no doubt, but its real power, its true value, only gets unlocked when you use it inside a structured system, like the 3 strategies we just walked through. It's all about making that shift from just randomly chasing signals to trading with a clear, deliberate, and repeatable process. And that really just leaves us with one final question to think about. You know, a tool like this is designed to give you a peek behind the curtain, to see momentum building before the rest of the crowd does. So the real question is, once you have that insight, how is that going to change the way you approach the market?